Crypto is evolving. Now that the long-anticipated spot Bitcoin and Ethereum ETFs are out in the open, the market is buzzing with the possibilities of what comes next. And many investors are turning their attention to one of the largest ETF managers out there, Grayscale.
Grayscale.
That's because Grayscale has been expanding its offering of altcoin trusts. And this has everyone wondering if they could turn into spot ETFs. Today, we'll be looking at the different altcoin trusts that Grayscale offers and telling you what this could all mean for the market. Stay tuned. Now, before we dive in, here's the deal. I'm not a financial advisor, I'm just keeping it real. Nothing in this video is advice to take, we're simply here to educate. So sit back, relax, and enjoy the show. But when it comes to your money, you're on your own. With that out of the way, it's time to make sail as we set course for the land of Grayscale. Now, in case you're unfamiliar with Grayscale, here's everything you need to know. Grayscale Investments is a digital asset management company founded in 2013. It's a subsidiary of crypto giant Digital Currency Group, or DCG, and very recently, Grayscale had a change of CEO as Michael Sonnenschein stepped down from the role to be replaced by Peter Mintzberg, a TradFi veteran from Goldman Sachs, who's also worked at BlackRock, Oppenheimer, and Invesco. Quite the resume. Now, aside from having one of the 11 approved spot Bitcoin ETFs launched back in January and one of the 8 spot Ethereum ETFs launched in July, Grayscale is also known for having a variety of crypto investment trusts, including for various altcoins. We'll come back to these altcoin trusts in a moment. First, though, we need to answer the pressing question. What is the difference between an investment trust and an ETF? Well, ETFs work by issuing their own shares that are created and destroyed based on the demand for the underlying assets in real time. That way, the price action of ETFs mimics the price action of the assets themselves as closely as possible, which is perfect for investors looking to trade riskier assets, like cryptocurrencies, without having direct exposure. Similarly, trusts also work by issuing their own shares. The difference is that these shares are created and destroyed periodically, not in real time like ETFs. The result is that there are often large price discrepancies between trust shares and the assets underlying them. These discounts and premiums have made trusts suboptimal relative to ETFs. The thing is that for a long time, investors looking to get exposure to crypto in a safe and regulated way didn't have any alternatives. It was trust or bust. That's because the SEC refused to approve a spot Bitcoin ETF for over a decade, despite dozens of attempts. The straw that finally broke the camel's back was Grayscale suing the SEC for refusing to convert its Bitcoin trust to an ETF, a case which Grayscale won. The result was that the SEC was forced to approve all spot Bitcoin ETF applications, making it possible for investors to access BTC in a safe and regulated manner without the huge discounts or premiums that come with trusts. And by the way, I trust you're enjoying the video so far. If so, smash that like button, subscribe to the channel, and ping that notification bell to ensure you keep learning about crypto. Hold up a second there, guy. Sorry to interrupt, folks, but I just wanted to very quickly tell you about the Coin Bureau deals page. Now, this is the place where we have put together some of the very best deals and promos in all of crypto. So you can think things like exchange sign-up bonuses, trading fee discounts, and money off of hardware wallets, and much, much more besides. So if you want to check that out, coinbureau.com/deals is the place to go, or you can just use the link in the description of this video down below. Thanks very much, and now, back to you, Guy. Now, since the spot Bitcoin ETFs were approved, there have been further developments. In case you forgot, 8 spot Ethereum ETFs were launched in July. What's interesting is that the initial approvals occurred way back in May under rather dubious circumstances. For reference, it was expected that the SEC would reject the spot Ethereum ETF applications for multiple reasons, namely the fact that the regulator was reportedly probing Ethereum's ecosystem for evidence that ETH was an unregistered security. Then, in a sudden change of heart, the SEC approved the spot Ethereum ETFs, and it's generally believed that this happened for political reasons. If this is indeed the case, then it's extremely significant. because it means that politics is theoretically the only thing standing in the way of additional altcoin ETFs. This has many investors excited about the possibility that other altcoins could get spot ETFs under the right circumstances. To put things into perspective, Grayscale has trusts for over a dozen altcoins and counting. The first altcoin trusts were for Ethereum Classics ETC and Zcash's ZEC, with both trusts being launched back in 2017. In 2018, Grayscale added trusts for Bitcoin Cash's BCH, Litecoin's LTC, and Stellar's XLM. It also launched the GDLC that same year, Grayscale's large cap trust, which currently consists of around 73% BTC, 20% ETH, 4% SOL, 2% XRP, and 0.5% AVAX. And by the way, if you're wondering why we say currently consists, it's simply because Grayscale rebalances these trusts on a quarterly basis, even going so far as to remove some cryptos entirely in favor of others. Anywho, Grayscale added 5 more altcoin trusts in 2021, along with a trust for DeFi projects. The altcoins in question were Solana's Sol, Chainlink's Link, Decentraland's Mana, Filecoin's Phil, LivePeer's LPT, and the Brave browser's BAT token. Meanwhile, Grayscale's DEFG DeFi trust currently consists of around 50% Uni, 20% MKR, 15% Aave, 10% LDO, and 4% SNX. Then, in 2023, Grayscale created the Dynamic Income Private Trust with a focus on staked cryptos. As the name suggests, this is only available to select investors at the time of shooting, and the trust consists of 34% in Coinbase staked ETH, 28% SOL, 25% NEAR, and 13% others. Of course, following the Bitcoin ETF success at the start of the year, Grayscale has continued to expand its offerings. In July, it launched another trust, this time for decentralized AI, which currently consists of around 33% Phil, 31% NEAR, 24% RNDR, 8% LPT, and 3% Tau. And in August, Grayscale also created investment trusts for BitAndSaw's Tau, as well as Sui, and, more recently, MakerDAO's MKR. And as a fun little side note, that last one was announced while we were making this video, so who knows, there could be even more by the time you're watching this. Crypto never sleeps after all. So, now that we're caught up with Grayscale's altcoin trusts, this begs the question of just how much interest they've garnered. The short answer appears to be lots. That's simply because almost every single one of these trusts is trading at a premium, with many being in the triple digits in percentage terms. But why is this important? Well, let's dive deeper into what a premium, and indeed a discount, actually means. As noted earlier, a premium means that the value of the trust is more than the value of the underlying asset. Logically, a discount means the opposite. And it's important to note, though, that Grayscale, or any other asset manager for that matter, doesn't set the premiums for these trusts. Rather, the premium is determined by the supply and demand for the trust. So, in simple terms, if a trust is trading at a premium, it means there's more demand for the crypto in question relative to the supply of shares trust holders are willing to sell. So, if a crypto trust is trading at a 30% premium, then it means there's lots of demand for the crypto in question. Likewise, if a trust trades at a discount, it means there's much less demand for the crypto in question relative to the supply of shares that trust holders are willing to buy. Thus, if a crypto trust is trading at a 30% discount, then it means there's very little demand for the crypto in question. Obviously, premiums and discounts on Grayscale's trusts have fluctuated significantly over the years. Take a second to consider that in December 2022, Grayscale's Bitcoin Trust was trading at almost a 50% discount, signaling very low interest. If you compare this with BTC's chart, you'll see this was at the same time that BTC's price had bottomed at around 16K, down from its previous all-time high of around 69K. At the opposite extreme, you have Grayscale's Litecoin Trust, which was trading at a whopping 1,800% premium in March 2021, right before LTC surged around 150% to its all-time high. Another instance of this is Grayscale's Solana Trust, which traded at an 869% premium in November last year before Sol went on an absolute tear. You get the point. Now today, almost every one of Grayscale's altcoin trusts is trading at a crazy premium, with only 2 of these premiums being less than 100%. By far the highest premium is on Grayscale's Filecoin Trust at a jaw-dropping 783% premium, with the Solana Trust coming in hot second at 663%. On the lower end of the premium scale are Grayscale's Litecoin and Zcash trusts, which still have premiums of 73% and 60% respectively. This underscores just how much altcoin demand there is coming from institutions. One of the only exceptions is Grayscale's Ethereum Classic Trust, which is trading at a 32% discount at the time of shooting, representing low interest in ETC. The silver lining is that it could also be a great entry point for any institutional investors who think ETC is undervalued. But what's perhaps more interesting is the selection of private altcoin trusts that Grayscale has put together in recent months for institutional investors. These include trusts for Near and Bitansor, both of which are AI plays, which makes sense when you consider the recently launched decentralized AI trust. There's also a selection of so-called ETH killers with smart contract cryptos such as Sui and Stacks, the latter being a smart contract layer 2 on Bitcoin. And this aligns with a Grayscale trust launched in 2022, literally called Smart Contract Platforms Excluding Ethereum. Although these could have also been chosen as infrastructure plays, which could explain why MakerDAO was chosen for the latest trust. Now, we couldn't actually find the data on the premiums, or discounts, on Grayscale's private trusts, but we're willing to bet that they tell a similar story to what's seen across the board on its other altcoin trusts. And if any of you know where to find this data, we would love to know too. So please do us a favor and let us know in the comments. Nevertheless, this highlights that institutions are paying attention to the hottest narratives, and it would appear that AI and smart contract cryptos are the ones to watch if you want to follow the so-called smart money. So then, what does all this mean for the crypto market? Well, we'll start with the obvious, which is that every crypto trust being launched is bullish for the underlying asset involved. This was evidenced most recently by MakerDAO, which rallied by 7% on the day that the news of a designated Grayscale trust broke. If you're a follower of our Telegram channel, you'll have seen that we recently covered this in our daily rally report. And you can keep up to date with which crypto has rallied the most in real time by becoming a member of our free Coin Bureau Insider Telegram channel. The link to that is in the description. Now, as you'll have seen, the majority of altcoin trusts are trading at insane premiums, highlighting massive interest from investors outside of the crypto space. Now, while this could foreshadow some ungodly gains on the horizon, there is a caveat. That's because if the premium on a crypto trust is too high, this could actually stall investment because people simply won't want to pay that premium. Never mind the fact that trusts don't directly impact the price of the cryptos involved due to the delays in issuance and redemption. Of course, the caveat to that caveat is that these investors could then turn to buying crypto assets directly instead of allocating to Grayscale's expensive trusts. But, well, let's not get ahead of ourselves. There are going to need to be some serious regulatory changes before that can happen. The key takeaway, though, is that the more interest there is in altcoin trusts, the more bullish it will be for the broader altcoin market. This is especially true when you consider that recently a Grayscale executive said that they expect that crypto ETFs will extend into other asset types. According to Dave Laval, Grayscale's global head of ETFs, quote, "We're going to see a number of more single asset products and then also certainly some index-based and diversified products. In other words, watch this space." Now, obviously, an altcoin index ETF would be bullish AF, as it would bring in a bucket load of liquidity to the altcoins within that ETF, which would be absolute rocket fuel, assuming physical backing, of course. But more importantly than the prospect of any potential mad gains, these altcoin trusts help to give cryptocurrencies more legitimacy. Just as we saw with the spot Bitcoin ETFs, Bitcoin has now become a mainstream investment option, and the launch of the spot Ethereum ETFs showed that crypto is more than just Bitcoin. If more of Grayscale's altcoin trusts are uplisted to spot ETFs, this will put not just the top 2 cryptos, but the entire crypto industry on the path towards mainstream adoption. And remember, folks, that is what it's all about. Okay, that is just about it for today's video. So if you enjoyed it, help us out by hitting those like and subscribe buttons and turn on those notifications to help you catch our next release. If you know anyone who'd enjoy this content too, take a second to help them by sharing this video. Also, don't forget to check out the Coin Bureau deals page, where we have some of the best deals in all of crypto. You'll find sign-up bonuses of up to $100,000 and trading fee discounts of up to 70%. We also have exclusive deals on hardware wallets for you to keep it all stored safely too. Thank you all so much for watching, and we'll see you in the next one. Until then, this is Guy bidding you goodbye.